Okay, so for this week we're gonna have a look at PostNL, which is the Dutch postal company, as you might have guessed from the name, quite frankly. Um, about 2 weeks ago, we looked at Deutsche Post, the absolute behemoth in the postal industry, originated in Germany, who has a big market share in Germany as well as in many other aspects of the world. And during that video, I mentioned that um, there is fierce competition going on in the Netherlands with the postal industry, which is limiting the growth that Deutsche Post has. And one of the reasons that the growth is limited is because of the existence of PostNL. So for this video, what we're going to do is we're going to have a look at the Dutch Post company and see how they perform. Now, the Dutch Post Company is really only operating in the Netherlands itself. It does have some small operations in other countries like Belgium, for example, but it's really only very minor compared to like the vast majority of their revenue. So in 2021, about 3 billion of the revenue came from the Netherlands, and the other 400 something million came from other parts of the world. So really, PostNL is really operating in the Netherlands itself. And PostNL is a company that delivers the parcels as well as the normal postage. And what we actually see with PostNL is that they have a monopoly on postage in the Netherlands, because in 2019 they acquired their biggest competitors, Sand, who was the bigger competitor when it comes to normal postage, or just envelopes that you send in the email, not in the email, in the mail. Sorry. But even with that acquisition, what we saw here in 2012 all the way up until about 2018 is that their revenue has been steadily decreasing over this time period. Now, there are actually quite a lot of reasons for this. I think management is probably one of them. Management has been heavily criticized by the choices that have been made over the last 10 years, but we'll get to that in a little bit, because another more obvious reason for the decrease in revenue, of course, is that people are not sending as many letters anymore as they used to. So having a monopoly in that field is really not that useful. Um, Most of the letters that are being sent out are by government agencies or official agencies, as well as, of course, the typical Christmas letter, or maybe the occasional letter to your pen pal. But apart from those, there's not. We see a very steady decrease in normal postage. But what we see from 2019 onwards, when we see the revenue growing again, is that the e-commerce business is actually starting to really emerge and really start to affect PostNL's numbers. So with the increase of parcels, with the coming of Amazon to the Netherlands, as well as the Dutch version of Amazon, which is bol.com, what we see here is that they start selling a lot more parcels, or delivering a lot more parcels, which is very much spiking their revenue again. But even with that increase in revenue, and even with the increase of revenue from 2021, which again was the COVID year and an absolute golden year for any postal company, we still see that on average their revenue has been decreasing by 2.4%, and that earnings has been decreasing even more by 2.7%. Now, this is really not something that we like to see, because this is basically a declining business, at least in the 10-year time span. Now, you could make the argument that in the last 3 years there's been a growing business, and quite a properly growing business when it comes to that. But I think it's very much influenced by the COVID pandemic, when no one was able to actually go to a boutique to buy their jeans or buy their socks, and you had to have everything delivered. And I think these numbers are probably a little bit inflated, even though I do think there's a growth story to be had for parcels, and with e-commerce being on the rise, I do think there's a potential happy ending for them. I just don't think it's as lucrative as people are imagining it to be. And the numbers here also agree with that. They've been decreasing their earnings and revenue by 2% year over year for the last 10 years. Now, in all fairness to them, though, their debt level has been going down quite steadily, especially in 2012, where they paid down about 400 billion in debt, which is also something that we're going to see back in their cash flow from operations as well in a little bit. But nevertheless, they have been paying down their debt, which makes it a lot more attractive as an investment, because there's less risk of bankruptcy, especially with the latest 2021 levels. 203 million in debt is a pretty good number, and it's very much what we like to see when we invest in a company. Looking at the excess cash as well, they always have some additional cash on hand, which is like to see, and a good buffer to have. Market cap has really been all over the place, and I'm not sure how else to really describe this. I mean, it goes from 1.5 billion to 2.3, back to 1.5 again, 1.5, 1.7, all the way to 2 billion, and suddenly it halves again the year after that. Like, this stock is a roller coaster of speculation of where the postal industry is going to be in the future, and apparently no one's really sure or committed to whatever theory it is they have. Looking at enterprise value, which is the market cap to which you add the debt and subtract the cash. And what we see when we look at the enterprise value actually is that their enterprise value has been decreasing. Now, this is mostly because they've been paying down their debt and they have more cash on hand. So kudos for them for actually doing that. But nevertheless, it means that the overall value of the business has been decreasing by about 6% year over year, which is again not really something that we like to see. EV/EBITDA ratio, so how many years does it take to actually pay back the entirety of your company? And at a certain point it was 10 times in 2018, which was a terrible year for them, where they had a relatively high debt and low EBITDA. But for the last few years it's been coming down all the way to like 4 or 5 times with an average of 6.6. Looking at that debt level, it's been on average about 2.5, which is a bit in the risky territory, and is really something that you have to take into consideration when you contemplate buying this company, because it's really not as risk-free as many of the other companies are. The revenues and the earnings are also really not as steady as personally I would like my stocks to be. Especially if you look at like companies like Deutsche Post, which we looked at previously. What we actually saw with them is that we saw a very steady revenue growth as well as a very steady earnings growth, which is quite a contrast with what we see here with PostNL, which is really up and down and all around. Nevertheless, though, for the last year, because of the COVID high, their EV to debt ratio has been quite low, so the risk of bankruptcy at this moment in time is quite low. Although, to be fair, 2022 is going to be a very bad year for them, especially with the economic headwinds which are coming our way. People will not be buying as many things from the internet as they used to during the COVID high, so I think their revenue as well as the earnings are going to come down. Now, an additional side mark there as well with the excess cash. They had quite a high number in 2021, but this is also going to come down quite a bit, because the reason for that is what PostNL very much did is they did not have as many people in employ, and instead had their delivery drivers hired as freelancers. And the perks of doing that, at least for PostNL, is that if you hire the freelancer, you don't have to give them a full-time contract, and you also definitely don't have to give them a pension or any kind of compensation or sick leave or anything like that. You can just give them a job to do. So I would like you to deliver 2,000 parcels today, and I'm going to pay you for every single parcel that you deliver, and this is all I'm going to do. What this did is there was many like very little mini postal companies who were working for PostNL as like a separate entity. And what this did is it made for a very stressful environment for these postal couriers, because they had to reach deadlines if they wanted to make their money. If they did not deliver enough parcels in a day, they did not earn enough money to actually buy their bread at the end of the week. So it made for a very terrible working circumstances, and PostNL was very heavily criticized because of that, and the leadership was very heavily criticized because of that, because what they really did is they were trying to squeeze every single euro out of their employees while not giving them the benefits or the contracts or anything that I think is actually quite a standard in Europe of like getting properly compensated and having enough security in place when you have a job. So they were very much criticized for that, and in 2022 they actually agreed to hire a lot more people on a full contract basis, as well as give them proper pensions, and they also very much increased their pensions. So a lot of the money that they have on hand here in 2021 is going to come down because they decided to actually properly treat their employees. Which I think is a very good thing to do. I think investing in your employees, to making sure that they have a nice work environment to work in, and making sure that they're properly compensated, will actually motivate and incentivize them, to properly do that job. Now, does that excuse them from using the method that they used prior for I don't know how many years? No, probably not. But it's a step in the right direction, and I think I should give credit where credit is due. Now looking at their cash flow, like I mentioned, in 2012 they paid back a lot of debt, so that's why their cash flow from operations is negative here, because they paid down 400 million in debt. This is also why the percentages at the bottom actually don't really make sense, because of all the negative numbers which are included in the earnings. So I'm sorry about that. Please feel free to ignore these numbers. But yeah, the cash flow from operations has been starting in 2012 at minus 56 billion and has risen all the way to 547. So when we look at these numbers, what we actually see is a pretty steady growth story. But that growth story doesn't start until 2018. As we can see, prior to that, it was actually a very stable or even declining business as a whole. But because they don't have as much debt to pay back, because they don't have as much interest to pay back, their cash flow from operations is actually starting to increase a little bit there. Now it's going to come down again in the next year, obviously, because they're not making as much money, as well as they have to pay their employees more proper wages again. So this number is definitely going to come down. But I do think this shows that there is a potential growth story to be had for this company. Looking at the capital expenditure, this is all the money that they have to put in to actually try to maintain the operations that they're currently running. So this means a new brush of paint for their sorting facilities, buying new machines when needed, refueling with gas. It's all the material things that you need to actually keep the business running. Maybe some new working clothes, maybe some raincoats for their employees. You know, everything that you actually need to properly run the business. And this capex has been relatively stable, coming up here a bit in 2021, which I think is fair enough, because it was a very, very busy year for them and they had to buy some proper equipment to actually handle all of that. Suddenly there was a big influx of additional parcels to be delivered, so of course they need to invest in additional infrastructure to make that happen. Looking at free cash flow, again, it tells a very similar story, where it used to be very, very bad. But for the last 3 years, we see the growth story coming to fruition here, of a pretty steady increase of free cash flow. Now, like I mentioned, this is going to come down indubitably. So we're going to take that into consideration when we give a future forecast. Looking at the share numbers as well, and this is one of the reasons as well that I actually really don't like the management of PostNL. So what they do with their free cash flow is, instead of investing it into their own business to try to maintain their foothold in the Netherlands, because they're being heavily competed right now by Deutsche Post, and they're losing market share every single year, which I think leads to part of the reason why they're declining so much. But they're also not expanding their business to any other countries, and not expanding in their own country as much, really, because what they do with their free cash flow is they basically give everything back to investors in the form of dividends. So all the earnings that they make is going back to investors, which is actually a nice thing for an investor, but it also means that the growth potential for this company is very limited because of it. And one of the things that they do as well with their dividend is they give you the choice to either take the dividend in cash or take the dividend in the form of additional shares. And I'm really, really, really not a fan of that. It's like you're rewarding a shareholder by giving them an additional share by diluting the actual company that you're giving the shares from. It's such a weird method, I think, of doing this. Like, you're basically rewarding them with the very thing that they're already holding, and you're decreasing the percentage of ownership for an investor, only to then offer it back to them in the form of dividend. And I just really do not agree with that. I think it's a terrible way to run your dividend. If you're going to give dividend, just give dividend in the form of monetary compensation, not in the form of shares. I think it's a terrible option. But on top of that, what we see as well was they sold some shares every now and again to actually buy back some of their debt. So they've been heavily diluting their share count. This is actually a typo. This is definitely not true. 455 is the actual number there. They have been diluting their share count consistently, and I actually expect them to keep doing that in the future unless management changes something. But this is not something that I like to see. I really don't. Looking at the free cash flow per share, that's again the interesting growth story here towards the end, where we see a massive free cash flow per share of 56 cents per share, which is an absolutely staggering number. But overall, it's been hanging around the neutral to 10 cents range. Looking at the share price, it's been starting at €2.92. It reached a low of €1.99 in 2018. A high again is 3 euros 85 during the COVID high, when they were making record earnings and record numbers, and the growth was seemingly unlimited. We'll see as well is that this number is going to come down drastically now that the COVID high is over and we are coming back to earth. Free cash flow yield has on average been 6%. For the last few years it's been quite a bit higher because of how high their free cash flow has been. But on average it's been 6%. So now we're in the business of trying to forecast this company, which is very tricky because, like I mentioned, they've been all over the place. Let's just quickly have a look at, if I can find it there, at the actual chart for their revenue as well as for their ratios. I mean, it's going up, it's going down, like their revenue as well, it's coming down, and now it's going up a little bit again. Their free cash flow has been positive and negative, seemingly randomly over the years. It's very difficult to forecast a business that is as inconsistent as this one is, but given that, we're still going to give it a try. So what I do for the very first year here is I'm going to say it's going to come back down to earth. The amazing free cash flow and earnings that they had in 2021 is not sustainable, and I'm going to reduce that by 30% because I want to be conservative. And if a conservative estimate beats the stock market is when I'm going to be interested in buying this company. So what I'm going to do here for the first year, I'm going to decrease it by 30%. And afterwards, on average, their earnings has been decreasing by 2.7%, right? But I think there might be a growth story here when it comes to the parcel package, but they really have to play it well. And they have to outperform their competitors and have to make sure that companies like Deutsche Post or Royal Postage does not intrude on their turf too much, and they're actually able to maintain the margins that they have, which I think is going to be very tricky for them. So I think I'm going to give them a 1% increase year over year when it comes to their earnings growth, after giving them a reduction of 30%. And this is my way of saying I want to be conservative when I look at this company. Now, looking at their market multiple as well, we see on average, historically, they've been around 6.6 times, with a high of 10 and a low in the past year of 4.5 times. I'm going to be conservative there as well. I want to be very conservative because I think it's a very risky business to invest in this one because it's really not consistent. So I'm going to give them 4 times, which is lower than they've ever been in the past. But it's my way of protecting myself from the investment. So this gives me an enterprise value of 943 million in 2031, and this is mostly because the massive cash that they have on hand right now is still included in this computation. Now this number is going to come down, like I mentioned, because of the pension plans and because of the additional contracts that were given to their employees. But I'm going to be conservative still, because I'm giving them a growth already for their earnings, which I think might not even happen because historically they've not been growing, and with the competitors coming into the country and taking some of their market share, they either have to expand to a different country or really invest in this one, and I think it's going to be quite tricky for them. So on all fields, I want to be conservative here if I want to invest in this company. So I'm going to maintain this cash here, which is going to lead to a market cap of 1.5 billion, which leads to a stock price 10 years from now of 2.89 euros. Now you might have noticed as well here that I increased the diluted shares to 550 because they've been diluting shares repeatedly over the last 10 years, and I think they're going to continue to do so unless management changes. So because of that as well, I put the number of shares at 550 million. Now I'm going to do the same for their free cash flow as well. I'm going to give them a reduction of 30% for the first year, and I'm going to give them a 1% increase after that. Free cash flow yield, on average, it's been 6%. Now, the higher the yield is, the lower the price forecast is, because it means there's not as much free cash flow available as otherwise would be. The highest number they have had was 14.6 times. So that means 56 cents that they have here, and this is 14.6% of the overall share price at that time. So this is what the 14.5% represents here. And so the higher this number is, the lower the stock price is going to be. So for our forecast here, I'm going to give them 14% because I'm going to want to be as conservative as I possibly can. I'm going to take the highest number they've ever been at, which gives me a stock price 10 years from now of 2.13 euros. Now, when we look at the combined valuation there, because I'm not sure which one is true, right? Whether it's enterprise value or the free cash flow model, I'm going to split them down the middle and say 50-50 for both, which gives me an overall share price 10 years from now of €2.51. Now, when we look at share price appreciation in the stock market itself, we see a return of 2.4%, which is very much underperforming. But this is really not the complete picture, because like I mentioned, with the free cash flow, what they do is they divvy everything out to investors. And if we believe this story here that we forecasted, where we say that their free cash flow is going to be positive every single year and increasing by 1%, which I think is a very lucrative forecast, because I do think every now and again their free cash flow is going to be negative, same like it has been here for like 2018, for example. Their cash flow has not been positive that year. And I think this is going to happen in the future as well. So if that does happen, the IRR is going to be decreasing a lot, because the IRR also includes the free cash flow that you're going to get from the company over the duration that you actually hold the shares. So if you hold these shares for 10 years of PostNL, you will get the dividends in the form of their paid out free cash flow. So this is very much included in your returns. And if you believe this to be true, which I think is unlikely, and there's definitely going to be numbers here where it's going to be negative, so I don't think this is true at all. I think this is being very optimistic. But if we take this very optimistic approach to their free cash flow per share, we get an IRR of 20.6%, which is actually very, very good. But again, it's very risky. And with this company, I have no idea exactly what it's going to be in 10 years, because it's been as inconsistent as I've seen for any company, quite frankly. And I think if you bet on this company of PostNL, you're very much betting on management to either change in management, or a change in the way that management approaches this business, because the way it's been going right now is not positive. The company has been declining, their revenue has been declining, their earnings have been declining. They are going to get fierce competition from many other postal companies like Deutsche Post, which is an absolute behemoth and not something that they can compete with at all. I think it's a very risky investment, but if the most best case scenario happens, it can also be a very lucrative one. So I'll leave that decision up to you. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff, and I'll see you in the next one. Cheerio!